Hey everyone, and welcome back to Fun English Podcast, the podcast where we tackle some of the hardest questions in healthcare, public policy, and social issues. I'm John, and today we're diving into a topic that many of us have probably encountered, whether directly or indirectly. We're asking, why do health insurance companies work so hard not to cover people?
Hello everyone, I'm Sarah. Yeah, John. It's one of those questions that might sound a little dramatic at first, but if you've ever had to fight with your insurer over a claim, or worse, had them deny a crucial treatment, it might not sound so extreme. Health insurance companies aren't just businesses. They're for real profits and all one kind of care. Payouts to prevent disease and medical insurance can feel like a barrier to getting the care they need.
Exactly. And that's the thing. People often assume health insurance is there to help you when you need it. But in reality, these companies often go to great lengths to avoid paying out for services that people are entitled to. And as we'll get into, this has huge consequences, especially when it comes to life-saving treatments, chronic conditions, and financial stability.
Right, and it's not just a matter of inconvenience. These decisions can impact your health, your quality of life, and in some cases, your survival. In today's episode, we're going to break down why this happens, how insurance companies manipulate the system to make it harder for people to access care, and most importantly, what we can do to fix it. Let's start by laying the foundation. Health insurance, at its core, is supposed to help people by spreading the financial risk of healthcare costs. When you buy insurance, you're paying into a system where the idea is that in the event of illness or injury, the insurer will help you cover those costs. But, John, you've studied the healthcare system extensively. Can you explain what's wrong with this picture?
Yeah, so health insurance, in theory, works just like other types of insurance. You pay premiums to an insurer, and in return, they're supposed to cover medical expenses when you need them. The idea is that you're part of a large group, and if you get sick, the cost of your treatment is shared by everyone in the pool. It's a risk pooling model. Some people will need more care than others, but the majority won't need much.
So everyone's paying in a little bit, and that's supposed to cover the people who end up needing more health care. This works fine in a simple risk pool, right?
In theory, yes, but the major problem with health insurance is that healthcare isn't like other insurance models. It's not just about accidents that happen at random. It's about long-term health needs. Some people might need a lot of care for chronic conditions, while others will only need occasional treatment. The stakes are incredibly high and the unpredictability is massive. So insurers are in a difficult spot. They need to make a profit, but they also need to cover expenses when people get sick.
And that's where things get murky, because insurers are still privately paying companies out of Medicare, a company that covers under 2,000 employees. So rather than just paying out for necessary treatments, they often find ways to minimize how much they pay out, right?
Exactly. That's the key problem. Health insurance companies are not in the business of healthcare. They're in the business of minimizing costs. The more they can save on payouts, the more profit they make. So for residential health insurers have a built-in incentive to deny claims, limit coverage, and increase premiums, especially for people who are more likely to need care, like those with chronic illnesses.
So while the rest of us are hoping that insurance will be there when we need it, these companies are actively trying to minimize their financial risks. This is where we start seeing some of the practices that many people would consider shady, right?
Exactly. Insurance companies try to cherry-pick healthier people, avoid high-cost patients, and find ways to avoid paying out. And if you're the one who's sick or needs a lot of care, you're on the losing end of this equation.
So let's talk about some of the tactics insurance companies use to avoid paying for care. One of the biggest complaints we hear is about denied claims. How does this process typically work, and why is it so common?
Claims denial is a standard practice in the industry, and it can happen for a variety of reasons. The most common reason an insurer will deny a claim is that they deem the treatment medically unnecessary. They might say, for example, that a certain procedure or medication isn't covered under the policy, or that there's a less expensive alternative available.
But is it really about what's medically necessary, or is it just a way for them to avoid paying?
In many cases, it's the latter. Insurers will often claim that a treatment isn't covered under the plan, even when it's clearly needed. And they do this because denying a claim saves them money. The truth is, insurance companies often have a financial incentive to deny as many claims as possible, hoping that the policyholder will either accept the decision or give up on appealing.
I think the other frustrating thing is how opaque the whole process is. A lot of times people are left in the dark about why their claims are denied, or they're given confusing explanations that don't make any sense. How do people even fight these denials?
Fighting a claim denial is often a huge bureaucratic battle. The appeals process is convoluted, time-consuming, and it's not designed to be easy. Many people just give up because they don't have the time, energy, or resources to keep pushing back. But if they do appeal, they often face a lot of roadblocks. Studies show that only about 1 in 5 denied claims ever gets reversed, and even then, that's usually only after months of paperwork, phone calls, and headaches.
So, in essence, these companies are betting that most people won't fight the denial, which saves them money. And for the people who don't give up, even if they win, it can be a long, draining process.
Absolutely. The longer they can delay care or deny claims, the more money they save. It's a systematic issue. It's built into the way the insurance model works. And unfortunately, it often leaves people stuck with huge medical bills or worse, without the treatment they need.
This is especially egregious when you look at life-threatening situations. I mean, there are countless stories of patients fighting tooth and nail for treatments that could save their lives, only to be told their insurer won't cover it.
Exactly. And this is where things get dangerous. People who need things like cancer treatments or organ transplants or life-saving surgeries are often left fighting a battle against the clock while their insurance company drags its feet. There are even cases where insurers refuse to cover medications for chronic conditions, saying they're too expensive or not part of the plan. But those medications are literally necessary to keep people alive.
Okay, so we've talked about the system and how it works in theory, but let's bring this back to real-world examples. John, you've spoken to a lot of people who have faced these issues directly. Can you share a few stories that really highlight the human cost of this system?
Absolutely. One story that sticks with me is about a woman named Linda, who had been living with rheumatoid arthritis for years. She was prescribed a biologic medication by her doctor, which worked well for her condition. But after her insurance company changed their formularies to include a cheaper alternative, Linda found herself in constant pain because the new medication wasn't as effective. She went through months of appeals and tried other treatments, but nothing worked as well as the original medication.
That's heartbreaking. So they were denying her the medication she needed, even though it was prescribed by her doctor?
Exactly, and she wasn't the only one. I also spoke to Jeff, a man who had heart disease and needed emergency surgery after a major heart attack. His insurer approved the procedure at first, but after he was discharged, they refused to cover the rehabilitation program his doctor recommended. The insurer argued that it was not medically necessary, despite the fact that the program was designed to prevent another heart attack.
Unbelievable. So Jeff needed this program to stay healthy and avoid future cardiac events, but the insurer denied it to save money?
Yes, and that's the problem. These decisions aren't based on what's best for the patient, they're based on the insurance company's bottom line. And it's not just a couple of people, these are the kinds of stories I hear from all over the country, every day.
So we know there's a problem, but what's the solution? How do we fix a system that's built to deny care, even to those who need it most? Margaret?
Well, there's no easy answer, but there are a few key steps we could take. First, we need more transparency in the insurance process. People should have clear, understandable explanations for why their claims are denied, and they should be given a real chance to appeal those decisions quickly and fairly.
And we need a system that prioritizes health over profit. If insurers didn't have the ability to deny care simply because it's expensive or inconvenient for them, more people would get the treatments they need.
Exactly. And that's where policies like Medicare for All or universal health care could come in. If health care were treated as a basic human right instead of a business commodity, we could move towards a system where coverage is guaranteed, no loopholes, no denials. It would remove the profit incentive for denying care.
It's a huge shift, but it's one that many other countries have already made. In the U.S., though, we need serious reform to ensure that everyone gets the care they need, without worrying about whether or not their insurance will cover it. Well, that's all we have for today's episode. John, this was a really eye-opening conversation.
Yeah, it was tough but important. Thanks for joining me, Sarah, and thank you to everyone who tuned in. We hope this episode gave you a better understanding of why health insurance companies often seem to work so hard not to cover people, and what we can do about it.
If you enjoyed this discussion or think it could help someone you know, please share the episode. And don't forget to leave us a review on whatever platform you're listening on. We love hearing your feedback.
And stay tuned for our next episode, where we'll be discussing the role of government in healthcare and whether a more regulated system could actually reduce costs. Until then, take care, and remember, health should always come before profit.
Stay healthy, stay informed, and let's keep pushing for a better, more just healthcare system for everyone.
To our listeners, if you've had struggles with your health insurance, share your story with us. Maybe we can highlight it in a future episode. Thanks for tuning in to the Fun English Channel podcast. Don't forget to like, subscribe, and share this episode with anyone who's had a hard time with their insurance. See you next time. Thank you so much for watching. If you enjoyed the video, please don't forget to like and subscribe to the channel. Your support means a lot, and it helps me create more great content for you. See you in the next video.